Hello, good morning, everybody. Thanks for joining in on a Sunday morning. Uh, so today, with our AMA, we want to touch upon a few points. One of the things, obviously, is going to be the recently concluded rebalance and what is it that we have done in the rebalance. Next, we are going to talk a little bit about macro factors and how markets have been moving in. There's been substantial upward movement in mid and small cap indices or stocks. So let's just take a quick look at that. And then with that as the background, with the upward movement of mid and small cap stocks and generally the markets as a whole, we want to share a few numbers with regards to movement of our tracker small cases, how that has been affecting the movement of momentum small cases, and what should generally be the approach of investors during such scenario. So let's get started. First, jumping into rebalance related discussions, we wanted to quickly share about specialty chemical companies and what's happening with them, because the performance over the last 1 year has been very, very poor. So generally, what specialty chemical companies have been seeing is weak demand from end user industries. Of course, we've all been reading about recession across the world. Probably India is one of the few exceptions and stuff like that. So as a consequence of that, there's generally been weak demand for specialty chemicals from end user industries like pharma, FMCG, agriculture, and the likes. The second thing that has been affecting specialty chemical companies is what China has been doing. China, because it's going through a slowdown, has been producing and dumping products at rock bottom prices because of their overcapacity. This has resulted in a glut. There's been overcapacity of specialty chemicals across markets, and that has sort of affected Indian companies. Both these factors have combined to pressurize both volume as well as price. Obviously, margins are also under pressure due to lower realization. Now, this is the story so far. What's going to happen going forward? Most global majors, we've been listening on to some con calls, and we've been reading some reports and stuff like that. So most global majors seem to expect that this destocking that has been happening will continue through calendar year 2023, that is at least another 4 months, because of which the near-term fundamental performance will continue to remain poor. This is only as far as the near term is concerned. The overall long-term growth story for the Indian specialty sector remains fairly intact. So the China and Euro plus one strategy by global customers is very, very relevant going forward as well. So in the near term, there is going to be some amount of pain. Investors will have to sort of take note of that and keep stay invested for the long term. But we feel we are confident that over the long term, the specialty chemical industry will do well. So just in terms of numbers, if you look at it, you can see that over the last in the first chart, the median, the green bar displays the median revenue growth of specialty chemical companies over a 12-month period. So June 2023 to June 2022 and June 2022 to 21, whatever is the growth number, it shows that. So the green bar shows the revenue growth and the red bar shows the net profit growth. So obviously, while companies have been able to grow their revenue, because they have been taking price hikes, they have been attempting to renegotiate contracts where they can and stuff like that. The green bar is up. That is, the revenue growth is up about 9.7%. However, you can see that because margins are under tremendous amount of pressure, the net profit is up about only 3.2%. And if you sort of compare the margin performance during the same time period, it's quite obvious to you. During the last 12-month period, gross profit margin, operating profit margin, net profit margin, everything has been at a lower level when compared to the year ago period. So this is sort of what has panned out for specialty chemical companies. Next, moving on to brand value small case. This time we have added InterGlobe Aviation to the basket. So just a little bit of understanding of what has happened with InterGlobe Aviation. Since 2022, the stock has been on our radar, but due to multitude of reasons, we were not able to add it to the basket. First, there was COVID, and that sort of brought entire travel industry to a standstill, and we were not comfortable taking a bet like InterGlobe Aviation at that point in time. Sort of for the next 2 years, the company's losses kept mounting, and the company posted a consolidated loss of about 6,000 crores in FY 2022. In 2023, their performance has started improving. Pandemic woes are behind. We've seen pent up travel demand also has improved. And then, sort of in a tangential benefit kind of thing, in May 2023, Go Air announced its bankruptcy. So essentially leaving InterGlobe Aviation and the clutch of Tata Airlines as the only two major players in the market. And the sort of in spite of all the increase in oil prices and stuff like that, InterGlobe Aviation was able to record was able to declare record profits in the first quarter of FY24, and the management commentary also says that there is strong business tailwinds. So overall, pretty good scenario for InterGlobe Aviation, and we thought this is the right time to take a call on that and jump into the stock, and which is why we've added to the brand value small case. Now, alongside adding InterGlobe Aviation, we've dropped two companies from the basket. One of them is United Breweries. So we added United Breweries sometime in June 2020, and performance of the stock since then has been pretty sort of flattish. I think we've managed to get a CAGR return of only about 7% since then. There are a couple of issues that that the company has been facing. One is the category issue itself, which wherein there is excess amount of intervention from the government in terms of imposing taxes, in terms of imposing restrictions on the route to market and the likes of that. One quick example is what has happened in Karnataka. So right after the budget, during the budget, the amount of taxes on Indian-made foreign liquor was exorbitantly increased, because of which immediately there was a drop in demand, or there was a drop in overall sales for this category in which United Brewery operates. And there was a significant loss of sales. So that is just an example, and this is this sort of behavior we've sort of been seeing across board. Next, there is the question of raw material inflation. Barley, glass prices, everything had spiked up, though there has been some tempering of inflation in barley. Glass prices continue to sort of trend high, and which is why the company has been facing significant amount of margin pressure. And then another important factor is there are multiple state and central election coming up in the next 1 year. So there is expected to be significant amount of disruption in the sense that, a curb on sale of alcohol and the likes that is going to happen. Management has also indicated that this is expected to affect performance. All of these factors together have sort of led to decline in performance metrics. You can see that in the EPS trend and the ROE trend and the likes. You can see that the EPS, in spite of drop after COVID, recovered marginally in FY22, but in FY23 the performance continued to be poor. The same thing has happened to ROE. From the highs of close to 20%, the ROE is at 7.7%, and FY23 was particularly poor show. So which is why we decided to bite the bullet, and we decided to drop this from the small case for now. Another company that we've dropped is Crompton and Greaves. Crompton and Greaves is one of those legacy companies that we've been holding in the basket for since probably 2016. There are a couple of things that is affecting the company. One is the category issue. What is happening is the space in which Crompton and Greaves operates, which is slightly premium products and stuff like that, they have generally been seeing headwinds, and there's not too much of demand coming through in this particular category, because of which top line has been under pressure for the company. Next, there was this inventory transition because of introduction of BE. Now, BE is a consumer durables or consumer electrical category standard that was introduced. Because the company had to transition to selling only BE products. Last year, between September to December, there was a lot of inventory losses for the company. On top of that, the BE products cost of production is also high by about 20 to 30%. Crompton and Greaves has not been able to pass on this entire cost completely, because of which their fundamentals have been under pressure. In order to sort of complete their portfolio, move away from just fans and lightings and stuff like that, they went ahead and bought Butterfly Gandhimati, which had an extensive range of kitchen appliances that were available, which used to sell kitchen appliances. So because of the poor demand, this sort of takes the synergy that was expected, where Crompton would go on and offer both kitchen products as well as other consumer durables products, that has not really taken off. So all these factors once again coming together to affect fundamental performance. You can see that the EPS trend has been sort of on the lower side. 9.75%, 9.75 in FY 2021 to 7.27 in FY 23. Similarly, the ROE trend has also significantly dropped down from 42.5% upwards of 35% during COVID, also down to 18% in FY 23. So that is the reason why we dropped Crompton and Hughes from the basket. And you can see that over the last 3 years, the price chart provides evidence that over the last 3 years, the price performance has been pretty flattish, and the returns have just been about 8% since the start of 2020, which is why we decided to drop it from the basket. Next, we have model small cases that we rebalance. This time, a fair number of model small cases were rebalanced. Value and momentum, we ended up dropping 2 stocks, adding 2 stocks. Cancelimist saw a little bit of a churn. Growth at fair price, 3 stocks added, 3 stocks dropped. Dividend smart beta straight flush did not see as much churn. Quality smart beta saw a fair amount of churn. Dividend stars and low risk smart beta also saw a fair amount of churn. So there's not since these are completely rule based, there is not too much of discussion that is sort of necessary over here. So now moving on from rebalancing related discussions to macros and markets. This is how the market performance has been over the last macro performance has been the macro performance has been over since the last couple of quarters. It's been trending high. You can see that the recent quarterly GDP growth number has been higher than the historical average of about close to 5%. And the composite PMI, which is the purchasing manager index, which shows how bullish the managers are about continued performance, expected growth, and expected performance going forward. That is also has continued to stay above 50 for significant amount of time, since probably Jan 2023. That number has been trending higher, and it is close to 60s right now. Which indicates a lot of bullishness from the manager side. This is not fund managers that we are talking about. This is managers who are working in factories, who are working in different kind of service companies, what they foresee the demand to be. So it is not just movement of money that is sort of expected. It is sort of the entire business activity that PMI points out to. So because of this sort of growth that has come through since March 2023, the markets have been on an uptrend. If you look at between October 2021 and February 2023, the market performance was very, very flattish. Probably one of the things that dragged down the market performance in October 2021 was the Russia-Ukraine war and subsequent increase in geopolitical tensions and increase in oil prices and stuff like that. Since then, till February 2023, Nifty 100, which is your largest 100 companies, gave a negative return of 4%. Whereas since March 23 till September 23, it has yielded 16.3%. Similarly, mid and small cap indices were down 1% and 16% between October 21 and February 23. And now it has risen close to 33% and 37%. Overall market, which is Nifty 500, was down 3.3%, and it is up about 20% since March 2023. So because of this, specifically in the mid and small cap category, because of the 33% and 37% increase, we've seen that a lot of fund managers have become very cautious about mid and small cap stocks. We've seen that a lot of brokers have entirely sold out, or rather emptied their mid cap recommendation and said that we are not looking to recommend any mid cap stocks now because of very high valuations and stuff like that. Probably there is definitely a case for such argument in case of specific companies. However, if you look at the universe of mid cap and small cap stocks, we see that if you try to compare the current valuation, which is the PE ratio of the company, with the historical average, you can see that there's not been any significant overvaluation. For instance, Nifty 100 is currently trading at about 23.1x trailing 12-month basis, whereas the historical average, if you take the PE number since January 2010, was at about 22.5. Similarly, mid-cap stock is currently, Nifty mid-cap 100 is trading at 23.9, whereas the historical average PE was 23.1. Nifty small-cap 100 is trading at 23.4, and the historical average was 26.7. So it's slightly undervalued still. Nifty 500 is trading at 23.6, and the historical average was 23.3. So we see that there's not been any significant amount of outperformance or overvaluation or anything of that sort. That is something that we just wanted to highlight in terms of valuation and market movements. Now going forward, given the context of market movement so far, we also wanted to highlight the performance of specific small cases. Let me start by talking about sectoral trackers. You can see that the blue line indicates what is the performance over the last 6 months, and the 1 year tracks the performance over the last 1 year. So auto tracker has yielded 24. It might be a little confusing, so let me just explain to you. Auto tracker has yielded cumulative returns of 25 close to 25% over the last 1 year, but the 6 months performance is 32%, which means it was yielding for the first 6 months. It was giving negative returns, whereas now it has turned the corner and it has started giving positive returns. That is how the chart should be read. Same thing is happening with banking tracker. It has returned to positive territory because of the 20% jump in returns over the last 6 months. Energy tracker was trading pretty flattish, and it has returned 21% over the last 6 months. Infra tracker was also slightly negative. It is up 25%, and all of those returns have come in over the last 6 months. IT tracker was doing pretty well amongst all our other trackers, and it has returned 36%. Out of the 24% returns have come in over the last 6 months. Metal tracker was one of those things because of commodity inflation had continued to do well, and that is up 34% over the last 1 year. 26% of those returns have come in the last 6 months. Pharma tracker was trading negative and it is up 22%. Similarly, realty tracker was trading negative and it is up 39% because of general recovery and expectation of normal monsoon and stuff like that. So if you look at the sectoral trackers, you can see that the performance has been pretty encouraging over the last 6 months, particularly since the markets have taken off, and that sort of is reflected in the performance of all other factorial small cases also. And I would like to talk about our momentum small cases specifically when I'm talking about the sectoral small cases, because whatever things like auto, energy, infra, IT companies, whoever are seeing momentum, there is automatically, because of the way the criteria has been set up, there is a self-selection of these companies into the momentum small cases, because of which the momentum small cases have started performing really well. So moving on to the next chart. The first chart shows you the performance of quality small cap smart beta, value and momentum, and cancel risk, and I have tried to plot it against the performance of equity multi-cap universe, which is the largest 500 companies by market cap. And you can see that probably somewhere between September 2021 till March 2023 or February 2023, the performance was very, very flat, and we've discussed this in our previous AMAs also. And subsequently, since March 2023, the performance has gone up drastically. And one can see that jump in performance. So I've laid it out in a table for you guys. The value and momentum small case, it gave a return of just 3% between October 21 and February 23. But since March 23, 1st of March 23 till September, it has given the returns of 53%. And since inception, which was in 2016, the compounded returns of the small case is 27.8%. Cancel risk small case yielded negative 6% returns between October 21 and Feb 23, right? And the performance of that small case between March 23 and September 23 is close to 30%. Compounded return since inception is about 24%. Quality small cap smart beta was pretty flattish between October 21 and Feb 23. It was down 2%. But since March 23, it has returned about 42.4%, and compounded return since inception in 2020, I think December 2020, is 38%. Now you can compare that with the performance of equity multi-cap. Performance was flattish at negative 3.3% between 21 and October 21 and Feb 23, but since then it has returned 20%. So the idea of putting out this performance was to sort of discuss with you guys how momentum small cases work. Obviously, any one of these small cases, whether it is quality small cap or cancel and value and momentum, these are not just pure momentum factor small cases, right? Momentum is one of the factors that has been included, or that is part of the selection criteria of the small case. So the the small case also consists of other criteria like quality, value, and size, and all of these things. But what happens is, when the market is not performing well, the momentum small cases will see a lot of sideward movements, and that is pretty evident from the chart over here. Since 2021 till March 2023, all of these small cases displayed sideward movement. But the moment market starts running up, these small cases will run up ahead of the market because of the momentum criteria that is part of the small case. So one thing that I wanted to highlight as far as these small cases is concerned is, it is better to stay invested in the long term, which is evidenced by the returns in the last column, right? Those are CAGR returns. Those are not absolute returns. I would like to highlight that. Over the long period of time, all of these small cases have performed exceptionally well and returned very high returns. But there is also a possibility that when the market is not performing well, that these small cases will also go through a lot of sideward movements for a long period of time. But the moment market picks up, the performance of these small cases also picks up, and they will run ahead of the markets, allowing users to sort of allowing investors to sort of recoup the losses that they have gone through over during the previous flattish period, and returns get generated. And momentum small case always, if you are investing in such a small case, you have to be ready for long-term play. You have to stay invested in such small cases over cycles, so that the best benefit can be derived out of it. So I sort of hope that sort of clarifies about momentum small cases. That brings me to the end of my session over here. That is my presentation. But we'll stay on, and we'll take up some questions that might be coming up. So one of the first questions that I have here from Ankit Thakur is, the brand value basket can be made free as earlier, as it is difficult to buy subscription plan for a single basket. Honestly speaking, I don't think we have any plans to go back to making it free. But if you if you're looking to buy into the basket, please reach out to us via support at windmill.capital. We'll see if there is any discount coupon. We'll be more than happy to share that with you. We have Chintamani saying, please come out with a defense and railway theme. We are exploring different ideas, Chintamani. If there are sufficient number of companies which meet all the criteria that are associated with the companies that we put it in the basket. So for us, it is very important that the companies that we put in the basket meet certain proprietary liquidity criteria, promoter pledging criteria, and all of these things. We are more than happy to sort of include it. So we will definitely consider coming out with new themes. Next, we have Nupur talking about why was Titagar dropped from value and momentum despite performing well. Can you shed a little bit light on that? So when it comes to model small cases, the way we act is, as long as the company meets the model criteria, we continue to hold it into the basket. If the model criteria is not being met, then the company gets dropped from the basket. So the question of performing well or not performing well, as far as model criteria is only as far as the model small cases are only determined by the criteria of that particular small case. I hope that clarifies. We've actually put out we've had a lengthy discussion around how we create model small cases, and we've also shared that with you via our newsletters also. So Nupur, I would suggest you go back and look at our live discussions historically on the same channel, and you will come across our discussion where we are talking about how we sort of rebalance value and momentum or any other model small case, and that should give you a lot of understanding of what we do with our small case. Next we have Aman. Sir, quite happy with value and momentum sitting around. What should be partial booking strategies, if any? Well, Aman, because we are investment managers, since Windmill Capital is not a investment analyst or anything of the sort, right? We are research analysts, right? We are SEBI-registered research analysts. So I cannot give you a recommendation or suggestion as to what your profit booking strategy should be like. If you feel that the markets are going to perform, continue to perform well, if you are confident about the strategy, then you should take a call to continue to stay invested in the small case. If that's not the case, if you feel the market could go sideways for various reasons, for any reasons, if you think there might be volatility ahead of next year's elections and stuff like that, then probably the good thing to do is sort of book partial profits. But I would suggest either one of whatever it is, whatever is the strategy that you're adopting, just do a little bit of research. My suggestion is talk to an investment advisor and then sort of take a call on that. Next, we have Sudhindra. You should also include cash component in the small case. This can be used when the market crashes. As of now, individual investors are responsible for maintaining cash. Yes, we have the cash component aspect of small case comes in our asset allocation versions. There explicitly we have a mandate that the constituents get moved into cash or gold or debt depending on the market situation. We also have something called AWI small cases, which sort of make sure that there is not too much of volatility. As far as other small cases are concerned, probably that is not the direction that we are that is not a direction that we are going to get into right now. Next, what should be the strategy when the crashes are happening? Should I put stop loss for E or let it be? Okay, sorry. What should be the strategy when crashes are happening? Like I told you, as far as momentum small cases are concerned, the question, the idea should be that you should ride out the waves. What is the amount of investment that you want to do, or what is the SIP that you want to do? That is totally up to you. But the idea, as far as momentum small cases, is sort of is to stay invested over long periods of time, and you will see the returns. I showed you the returns since inception for all the three momentum small cases, and that is the way it should be. And any one of our small cases, even outside of momentum small cases, are all long-term products. So personally, when I am investing, when there is a market crash happening, then I always view it as if I'm confident about the companies that I'm investing in or the strategies that I'm investing in, I personally view every market crash or any dip in the market as a good buying opportunity. And I personally don't use any kind of stop loss. I let it be and stuff like that. So, which is what I can tell you. It's not a recommendation or suggestion that you should also do the same thing, but just something for you to think about. Vishal, what's the maximum recommended amount to invest in value and momentum? Vishal, there is no maximum amount as such that we would recommend. But if you are one of those people who's paid the subscription fees and you are sort of invested, then over a period of time, it would be prudent to sort of get a return on that, good return on that subscription plan. So if you are paying something like 6,000 rupees or 8,000 rupees, then over a period of time, the idea would be to invest about 6 to 8 lakh rupees in the small case so that your expense ratio comes down to about 1%. I need planning about SWP for future from small cases. Can you do the arrangements? I'm not too sure what a SWP is, Nitish. If you need some specific customization, my suggestion is please sort of drop in a line to support@windmill.capital and we'll discuss what can be done. Munna, what will happen to railway stocks and PSU banks in near future? Will they find place in any of our small cases? Well, I think wherever the company is meeting certain criteria, so let me take it from a perspective of modern small cases and then from a perspective of thematic small cases. From a perspective of modern small cases, wherever there is good amount of value and momentum, or wherever there is good amount of growth coming in through and momentum, or any one of these criteria are going to be met, then obviously whether it is a railway stock or a PSU bank or whatever it is going to get added to the small case. That's an obvious thing. As far as the thematic small cases are concerned, I think PSU banks, Bank of Baroda, State Bank of India are already part of the banking tracker. small case. And obviously, wherever there is a good opportunity, we will always look to include such banks where there is a good amount of theme fit. I don't think same thing happens for railway stocks also, right? If we think there is a good amount of theme fit, then we might decide to add these stocks in transporting India or any one of these small cases. So it's all about long-term theme fit, as well as these companies meeting proprietary checks like liquidity, promoter pledging, not part of the ASM, GSM list, and these kinds of things. Roland, what's your recommended best long-term windmill small case with a budget of 50? Okay. Now, as I told you, Roland, Windmill Capital is a research analyst. We are not investment advisors. So there is no recommendation or suggestion as far as best long-term Windmill Capital small case that I can give you. I don't believe there is anything called a best long-term Windmill Capital small case. Any small case that has been published on Windmill Capital's website, we have published it because it meets certain thematic criteria or model criteria, and they have performed good amount of returns, and we feel these themes and these model criteria are going to be relevant over the long term as well. So I don't think there is one single best small case that can be picked up from that lot. It all depends on what your risk profile is, what your investment requirements are, and whether a specific small case meets your risk profile and investment requirements and stuff like that. Ankit, how many baskets is apt for an individual for investing, as there are now even from Windmill Capital baskets there? So Dalim, which one to choose and how many baskets to choose? Like I told Roland, Ankit, it all depends on what are the themes that you feel are going to work very well in the future. What is the amount of money that you have to invest and stuff like that. So my suggestion is, it's a little difficult for me without knowing the answer to all of these questions to answer your question, because I don't know anything about your risk profile. What is the amount of money that you are ready to invest? What is the time frame that you're looking at and stuff like that? My suggestion is sit with an investment advisor, discuss all of these aspects, and then you can take a call on how many baskets you want to stay invested in. What is the difference between a small case and a PMS? Well, in a PMS, what happens is, PMS for the uninitiated is portfolio management services. You give money to a fund manager, and the fund manager decides what company. It's a PMS is pretty much like a closed mutual fund. A mutual fund is open for everybody, but a PMS is not open for everybody. The fund manager decides, sets up a minimum investment amount. He decides who to take on board, and he collects money from people, and decides to invest it in specific stocks. Once in a month or once in a quarter, you will get to know what investments the investment manager has done. Now, as far as small case is concerned, what Windmill Capital does is we just create curated portfolios, right? Investors are not forced to get into one plan or the other plan or anything of that sort. And investors will have access to the complete, all the stocks of the curated portfolio as well as their corresponding weights. And investors can decide whether they want to buy into a specific curated portfolio or not. If they want to buy in, what is the amount of money that they want to invest in? And when the rebalance updates get generated, whether they want to, rebalance their small cases or not. If they want to go ahead and customize the small case that they have invested in by adding more stocks of a particular company, adding completely new set of companies and stuff like that, they can definitely go ahead and do all of those things. So that is broadly the difference between, there is a lot of do-it-yourself aspect to a small case, Windmill Capital small case versus a PMS. Sati, will you suggest any retirement safe small case? We have a whole bunch of Horizon small cases, Sati. I suggest you take a look at those small cases. There is like a corresponding blog, and we've put out a lot of material around Horizon small cases, discussing how it works and how it is a very good product as far as retirement or any one of these goal-based investing is concerned. Whether the goal might be retirement, the goal might be marriage, the goal might be future studies or children's education or anything of that sort. My suggestion is, please explore those. If you have any questions, kindly drop in a line to support@windmill.capital, and we will give you any other additional information that you want. We will give that to you. How are small case different from mutual funds in terms of cost involved? Vishwanath, I think we've touched upon this previously also. If you're going in for any free small case, I think there is absolutely no comparison. There is no cost involved at all for an investor, apart from the statutory charges that that are levied by the broker or by the government or something of that sort, and the 100 rupees that probably 100 or 125, I don't remember the exact amount, that small case charges you. There is no charge at all from as far as Windmill Capital is concerned. But in case of mutual fund, you will always have an expense ratio. When it comes to paid small cases, there is a subscription fee that you have to pay, whereas most mutual funds will not charge you a subscription fee. So that is where the difference comes in from. Karthik, how does Windmill ensure volatility in small cap doesn't wipe out investor wealth? I don't think there is ever going to be a situation where volatility in small cap is going to completely, that is, you're going to reach zero level. I don't think that's ever going to happen. While the only scenario that I can see something like that happening is when there is like exceptional amount of volatility that we have not seen over the last 6-7 years. Even during COVID lockdowns and stuff like that, we did not see that kind of volatility. There was substantial drop in price performance and stuff like that, but we have never seen that kind of volatility. I think if it ever comes to that kind of volatility, then we might simply decide that we are going to sell at whatever price there is available. If we feel that, if we see such volatility, and if we feel that the volatility is going to continue and the markets are never going to recover, then our thought process might be that we are going to sell at whatever price that's available and move everything to cash. That might be the thing. Right now, I don't think we've seen anything of that sort. We make sure that any one of our small cases, right, there is substantial amount of growth or a quality factor that is sort of involved, and it is not just size factor as far as small cap is concerned that we add to the basket. So I think that sort of takes care of volatility to a certain extent. If it is a quality company, if it is a company that is growing at a fast pace, I think volatility because of speculation can be ruled out to a certain extent. So that is sort of the way we safeguard it in a way. Why is small case a better investment vehicle than a thematic mutual fund? I think you cannot compare small case in its entirety with a thematic mutual fund. That will not be an apples to apples comparison. An apples to apples comparison would be something like thematic small cases with thematic mutual funds. We've done fairly deep study of thematic mutual funds, and I think there are not too many I can't remember a single mutual fund that offered themes around specialty chemicals, around brand value, around rising rural demand, around like electric mobility and stuff like that. I think that way, if you look at it, if you were to compare Windmill Capital's thematic small cases versus the themes that are available to you as an investor, and if you want to go them via the mutual fund route, I think the route is sort of pretty limited. That's why I would without any hesitation say we have a wider range that's available to us. Rahul, can we have something in small case with the weekly rebalancing? Also, I have noticed that the small cases rebalance are skipped or no rebalance is required. Weekly rebalancing, like I told you, Rahul, we already have asset allocation version of small cases. Please take a look at that. So just to give you an introduction, we have 4 asset allocation version small cases. The underlying themes are value and momentum, can slim, growth at fair price, and straight flush. And where if we feel that if the algorithm points to excess of volatility going forward, what happens is the entire portfolio, underlying portfolio, we move out of it completely into gold and debt. And when we feel the volatility comes down, we start taking exposure to the underlying portfolio, which is value and momentum or cancel risk and so on and so forth. So Rahul, I would suggest you kindly explore that. If you have any further questions, please do reach out to us on support@windmill.capital, and we'll definitely answer any questions that you have. Mariner is asking why specialty small case stop for new subscriber. Like I told you, we expect further poor performance as far as specialty chemical is concerned for some amount of time going forward, which is why we have stopped. We're not going to allow any new subscriber to get into the small case. But existing subscribers can always invest more, partially exit, completely exit, whatever it is that you want to do with the small case. If you want to continue your SIPs and stuff like that, you will be allowed to do that, and there is no restriction on any one of those things. So just to reiterate, existing subscribers can exit the small case at any point in time completely, partially exit, invest more, continue with your SIPs or stop your SIPs, or any action that you were allowed to take so far, you will be allowed to do that. There is no reason to panic. As far as new investors are concerned, since we feel that the overall macro picture around specialty chemicals is sort of going to be painful in the near term, we have stopped new subscribers from getting into the small case. As and when the macro picture improves, we will definitely open it up for new subscribers as well, right? And we are very, very confident about the long-term growth potential of specialty chemicals small case, and which is why we are not recommending, or we are not shutting it down or anything of that sort. Uh, can small cases be used for short-term investments, maybe like 2 to 3 years? Abhishek is asking this question. I would definitely suggest against it. Like I told you, October 21st, October 2021 to February 2023 is close to 2 years, if not 2 years, and you can see that the performance was very, very flattish during that time, right? So if you don't have a long-term view, my suggestions, first of all, don't get into equities. That's not the right thing to do. Even if you want to get into equities, then if you just have a 2 to 3 years view, it is always good to stay invested in large cap stocks. If you want to do something like small cap and or small cap plus momentum and stuff like that, it is always good to ride across multiple waves, which means 5 to 7 years should be sort of like the time period that you're looking to invest in. Okay, Sehaj Sagar is asking a very good question. If a small case has a 50% CAGR over 3-year time period, is it possible that these small cases can't continue this much returns in the future? Will they be able to generate so much returns in the future? Well, Sehaj and everybody else who have tuned in, there is absolutely no guarantee that a particular small case will continue to generate 50% returns, which is exceptionally high over the long term as well. It might happen or it might not happen. But however, if you are investing in a small case, or if you are investing in any equity product, you should never go in with the expectation that you will be able to generate 50% returns and stuff like that. That's to sort of I think there are hardly any example of any fund manager being able to maintain that kind of performance. In fact, during our March, right in July, when we did an AMA, we explicitly touched on this topic, and we showed you what is the historical performance of mutual funds and PMS companies and small cases also. And the expectation, as far as I think, if I remember the numbers correctly, if you are investing in a large cap fund, the idea should be that you're going to generate probably 14 to 15% returns. And if it is a mid cap or a small cap fund, it is between 18 to 22 to 22% returns CAGR over a period of time. That should be your idea. The idea should never be that you're going to generate something in the 50% range. I think I've answered most of the questions. I can't find anything sort of that's very interesting. Siddharth Saha is asking, can you also show SIP performance? Also, what is the recommendation, lump sum or SIP for both for small cases? If you go on to the website, I think you can see that SIP performance is also available to you. If you go on to the overview section of the small case, the chart, you can see the chart, and you can see that the SIP performance can be seen. And the recommendation, I would always suggest that if you're investing in any small case or any other equity product, it always makes sense to go in via the SIP route. But then if you keep getting lump sum amounts also because of the nature of your work and stuff like that, a combination of both should work pretty well for you. Going forward, somebody is asking, where will Windmill Capital focus, small cap or mid cap? Like I told you, so I think it needs some clarification. There is no one single focus that we have, whether we are going to be looking at large cap only stocks or mid cap stocks or small cap stocks. Our focus is always via different small cases. So there are particular small cases, something like dividend smart beta or quality smart beta, because of the nature of the criteria, right? Uh, uh, there is always going to be a lot of self-selection of large cap stocks, but then there are going to be small cases like dividend stars or a value and momentum or a cancelis, where there is, because of the way the criteria has been set up, the sort of, there is going to be a lot of self-selection of um, mid and small cap stocks. So there is no windmill capital focus as such. It is just that the way our small cases are set up, there is going to be a certain self-selection of the self-selection of mid cap or large cap into specific small cases, and that is how it's going to work. Windmill Capital itself does not have any specific focus or anything of that sort as far as any one of these stocks are concerned. Okay. Shrikant is saying windmill package discount of all the good small cases on subscription basis. Earlier, there was a 50% discount on the entire windmill capital small case. Shrikant, I don't think there's ever been a situation where we have offered 50% discount. But if you're keen on buying into something, please message us. We'll see what is the best discount that we can offer as far as any fee-based small case is concerned. And let me point out to you, I think there are only 15 to 16 small cases out of the 50 plus small cases that are on offer. There are only about 15 to 16 small cases that are fee-based, and everything else is free to investor. And I would suggest you explore those also. But if you're keen on buying into any specific subscription plan, then definitely drop in a line, and we will check to see what is the best that we can do in terms of discount coupon. I think that sort of brings it down to the end of our session. I think I've answered most of the questions. Thanks for tuning in on a Sunday. I think it's been a very productive session, and we'll continue to host these sessions going forward as well. And we'll stop here today. Thanks, everybody. Bye.